of time here or a little time? All right, lots of time or just a little bit of time here. This is an intraday chart. Okay, yeah, just a little time, right? I agree with you. So what does that tell us about the supply-demand equation there behind the scenes? Now remember, when the trading books tell us when they teach us how to identify key support and resistance levels, what they do is they say look for areas on the chart where there was lots of trading activity, many candles on the screen, right? Heavy volume, right? Everybody gets all that. But if you think the logic through, I think you'll find that the opposite is true. Think about it. In any market, at a price level where supply and demand is most out of balance, are you going to get many transactions or very few transactions? Which one? What are you going to get? If there's a big imbalance in a market, you're going to get many transactions at that price or very few? Yeah, you're going to get very few, exactly. So what is that picture going to look like on a chart? Is it going to be many candles like all the books say? Or is it going to be very few, right? I think you get the point. So the fact that price spent so little time here, the fact that price shot out of this level tells us there's probably a decent amount of demand right here, okay? Now, this is the yen, Japanese yen, and now you may be thinking, boy, it'd be great to see what the banks and dealers, have on their trade desks at every price level. Well, we can see all that, not the detailed numbers, but we can see, generally we can see that on the charts, okay? Think about it. Let me ask you this. At this price level in this yellow shaded area, did everybody who wanted to buy, were they able to buy? All the banks and dealer desks, were they able to buy everything they wanted to buy? Were all the orders filled? No, exactly. We know that for a fact because prices had to rally away. And again, more for new people, I'm trying to get you to understand that, what this picture represents, okay? Because all we're interested in as traders, and really all we're interested in, is the picture that represents more willing demand than supply or more willing supply than demand. Make sense? So, if you understand that, move over to the right where the trade was taken, okay, right over here, when prices came back to this level, okay, what do we know about the people trading here? Well, the buyers are making a good decision, but what about the sellers? What do we know about the sellers? We know that the sellers are making the two mistakes that every consistent losing trader makes. Mistake number one, they're selling after a drop in price. Mistake number two, they're selling into a price level where demand exceeds supply. The laws of supply and demand guarantee that these sellers who take that action, that novice action, okay, will lose consistently. Maybe not every time, okay, but most of the time, okay. Now, let's go to component number two. So we've already said two most important parts of a trade: identify a quality supply demand level. Number two, profit margin. So take a look over here. Now, what I'm going to do is let me put a circle on this chart so you can really understand it. Okay, let me just give me a second here. I'll get it up for you right there. And let me capture the chart. 1 second here, and I'll get it for you. Okay, so take a look at this picture. All right, so now you should see a circled area on the chart. Okay, now pay close attention. That circled area represents the initial profit margin after above this demand level. Now, in the XLT, one of the things we talk about is when we're looking for key levels, support, resistance, demand, supply, whatever you want to call it, we do not cut through candles. Okay, we don't cut through candles. So prices in this red area, look, see these three red candles? There's nothing in this circle that would stop prices from rallying. Does everybody clearly understand that? That's why, 1 second. So make sure you clearly understand why that is. The fact, here we go. Right, so when prices come down and we want to buy right at this black line with a protective sell stop just below the area, when prices are at this black line after this drop, there's nothing in these red candles, there's no basing, no picture that represents supply that can stop prices from rallying until you get to here. Okay, so let me draw that in real quick. Just take a second. Let me do it this way. Just take a minute. Not even. Drawing in PowerPoint on the fly is not a great idea, but I'm going to try to do it anyway here. And one more, and then I'll grab the chart. And the rest of these we'll go through faster. I just want to make sure you get it on the first one. Okay, so let me grab the picture again. And I'll try to get back to a lot of these questions in a bit. I just want to make sure we have time to get to the live markets and spend a lot of time there. So take a look. So the areas, the circled area, is the easiest part of this trade. Notice, again, strong drop in price to the demand level. We buy. And again, the reason why this trade works, it's not just because of the demand level. That's half of it. Okay? Maybe less than half of it, but that's half. That part makes it more attractive than the demand level itself. Does that make sense? Okay? I'll give you the supply-demand equation in the level better than just touch counts. Does that make sense? Because you could come back and touch that level 5 times. And if you're just touching it, I would buy the 6. You know what I mean? But if the first time, for example, prices go, more than 50% into the level, forget it, right? It's just a more objective way of doing it, okay? Again, I don't want to sit here and always beat up the trading books, but look, this is your hard-earned money you're putting at risk. I'm not a broker, and I'm just here doing this, I don't get paid to do any of these things at FX Street. I'm just here for your well-being. And so I'm just going to give it to you straight. I mean, the bottom line is you need to focus on the reality. I'm not saying you, John, anybody. I'm saying, you need to focus on the reality of how this stuff works and not, you know what I mean? Okay. Area, if this supply area that I'm pointing to right now was a little bit lower, this would not have been a great trade to take. Okay. Yeah. So Maurice, I think you're talking about down here, this pivot low. The pivot low is okay. As long as that's not like a pullback into something else to the left, which a lot of times it is. So just be careful with that. Make sure the pullback wasn't too deep. Okay, this is a fresh level here. All right, let's move on. The other thing I do at Online Trading Academy is I help produce what we call Pro Picks. So you should be able to see Pro Picks on here. And again, we're going to dive into the trades. So Pro Picks is a service where each day we give you a trade to take in the Forex market, at least one, sometimes more. You can see we give you the exact entry, the stop, the targets. We give you the strategy write-up, and then the chart. This is from a ways back, but I want to show you how I treated this setup. If you remember, this is late. This is going very late last year into December. Euro on the daily coming down into this demand level. We have this here in FX Street as well. So I wrote this up, and again, this is November 29th. This trade was put out there. This is for a big swing trade. As we know, this came way up, this turn here, and went up hundreds and hundreds of pips from that level. But take a look. So the very next day, okay, take a look. Again, I want to show you how I do this from the short-term side of things. So the very next day, actually later that day, prices dip down into that like I do a trade the very next day. Okay? All right. So this is just a day trade off this level. So just because prices are coming into a weekly level, it doesn't mean I'm putting my stop on the other side of that level. I'm going down to a smaller time frame and taking that trade. Let me show you exactly how I did that the very next day. So that day made about $3,500 just short-term trading off this larger time frame level. But take a look. The very next day, okay, on the 30th, took the same level, same area as a short-term day trade. Notice this is a 1-minute chart of the euro. Now, I'm not suggesting or pushing you to use 1-minute charts. I don't look at them that often. Usually the smallest time frame I'll go is a 5 or 10-minute chart. But here, now pay close attention, because price was into that weekly demand area, that means I'm comfortable going down to a really small time frame and taking anything that represents, pretty decent demand, because I know the profit margin is huge, and I know the odds are stacked in my favor. So on that 1 minute, we were down in that weekly level, started to get a little 1-minute uptrend here. So as soon as the demand level formed here, I just caught the pullback here. Okay? But notice, another way to describe this profit margin, pay close attention. Notice here's a supply area, right? Does everybody see the supply area I'm pointing to? So you may look at this and say, well, there's no profit margin for this trade, but, okay? Alright, but take a look. The fact that, when this is a supply level, okay? But notice the breakout from this area, right here, this green candle, which makes this a demand level, okay? Takes price up into here, and we stay there for a little bit, which means we are absorbing, okay? The buyers here, the demand, is absorbing all the supply here, all the willing supply. which means when prices come back for our entry, which was this trade, okay, or part of that trade, there's nothing to stop prices from shooting higher here because these willing buyers absorb all these sell orders here. Does that make sense? Okay. So it doesn't have to be a strong, big red drop. Make sure that the supply to the left is gone. Make sense? Okay. And again, think about, now remember the main components of the supply-demand strategy. You know, what the level is and how to identify it itself. And secondly, when prices come back in the area, remember, we always want to focus on who is on the other side of our trade. We want to make sure that we're trading with people that have no idea what they're doing, people who, are just, novice traders. So, think about the sellers here who were selling to me when I was buying. Let's go over it. Let's see if you could do it. There are 4 mistakes that this seller was making that almost guaranteed them a loss, which means if we know what those mistakes are, we can be consistently profitable, right? Because we can identify that group. What are the 4 mistakes that those sellers are making there? Okay. All right, Derek. Yeah, I'll get a little more basic in a few minutes. Most people here have been through this a number of times, but so they're selling after a drop in price. That's mistake number 1. Selling into an area price level where demand exceeds supply. Mistake number 2. Okay. What else? There's 2 others. The big one we haven't even mentioned yet. Against the trend. Against the trend, right? Okay. Yeah, so they're selling in the context of an uptrend. Yeah, and Rob, exactly, and Forbes, yeah. They're selling inside a big weekly demand level. That's like account suicide, right? Okay. So those 4 mistakes, we identify that. It means we want to be the buyer. All right. Now again, the reason why the profit margin is so nice here, and I wanted to show you this one. The first example we looked at, we saw there were big red candles down, which means there's usually going to be big green candles up. But the other way to look at it is this. This rally here, okay, we know the profit margin's outstanding on the larger time frame. But this rally that causes us to be a demand level, right, when price is here, the buyers who are buying here are absorbing all this significant supply to the left. So that means the price should shoot right through this level. That's why we took the trade. Okay? All right. Now the very next day, price is just starting to come out level. Okay? So I did it again. Okay? I'm buying. I mean, when you're in this larger time frame demand area, okay, right, we, obviously just doing it again. Okay? Just jumping on this thing when the odds are stacked in our favor. So 3-4 days in a row, aggressively buying the euro and making anywhere from $1,000 to $3,000, doing it a day. But now here's the other side of it. Do you remember what the news was in the euro back then? Anybody remember what the news was? What was the news in the euro? Yeah, and Andrea, there's really not a lot of nuances. Remember, these are 1 hour. Yeah, the end of the euro. Jason Volkner. They're talking about ending the euro back then. So if you're focused on the news and a currency that might end, you're probably going to push the sell button. But if you're focused on the reality of how you make money buying and selling anything, you're clearly pushing the buy button because price was at a demand level or wholesale prices, as we call it as well, right? Okay? So, there you go. But let me show you something else here.